stocks which are buzzing around today are the AllCargo group companies. AllCargo Logistics has announced a scheme of arrangement where the international supply chain business of the company will demerge into a separate entity called AllCargo ECU, and the resultant AllCargo Logistics will hold the express and contracts logistics business, whereas AllCargo Gati, that structure will merge into AllCargo Logistics itself. Both the stocks are up and about in today's trading session. What does it mean for shareholders, the listed entities, and how do these numbers stack up? We have Ravi Jakhar, who's the Chief Strategy Officer of the company, joins in now to discuss this further. Thanks a lot, Ravi, for joining in. Let's simplify things for viewers and everyone who's watching right now, right? We know what exactly you have announced. You have also in your presentation given us the numbers of your international supply chain business, express business, and contracts logistics business. So now with both these two identities, can you tell us what will the revenue and EBITDA margin of both of these entities look like?
Yeah, so I think, just to set the context, this is like the final step in our scheme of restructuring and creating value through strategic initiatives. We started with two businesses, AllCargo Terminals and Trans-India Real Estate, which have already been demerged. And now this is the last leg wherein the two key businesses, which are the flagship business of EQ Worldwide, our international supply chain, and the domestic supply chain of Gati, which is express and the contract logistics and the AllCargo supply chain. These businesses now also get very well streamlined and simplified in terms of corporate structure. So in simple terms, there are just two things which are being done. The international supply chain business, EQ Worldwide, demerges on a 1:1 mirror demerger into AllCargo EQ Limited. So the shareholders of AllCargo continue to hold the shares of AllCargo EQ, the international supply chain business. On the other side, on the domestic supply chain, there's a complex structure at this point in time, which gets extremely simple. Gati Express Supply Chain, which is the operating entity, Gati, AllCargo Supply Chain, all of them roll into AllCargo Logistics, and that becomes the domestic supply chain powerhouse, which would house both the express and the contract logistics business. What it means for shareholders, if you see the underlying business of express logistics is roughly at a scale of about 1,500 crores or revenue, about 70 odd crores EBITDA reported for FY23. The contract logistics business is approximately about 400 crore kind of revenue, around 120 crore kind of EBITDA for FY23 again. Now, from Gati shareholders' perspective, they today own 70% of the express business, which is about 71 crores EBITDA for the FY23. Now, they would participate in the 100% of their express business and also 100% of the contract logistics business. From AllCargo perspective, they already hold both the businesses, but it would now be in a much more simpler structure. And on top of that, as the two businesses come together, synergies would kick in terms of customer integration, common infrastructure footprint, rising management costs, and so on and so forth.
Yeah. All right, Ravi, we take that point down, and good to see you and Nigel on this side. You mentioned some synergy benefits, right? Could you quantify it?
Yeah, so basically on the contract logistics and express logistics, we are largely catering to the same set of customers. Like in international supply chain, it's forwarders who are our main customers. On the domestic supply chain in both businesses, we work with key strategic accounts, MSMEs and retail customers where they need fulfillment in terms of warehousing and distribution. And now these two companies combined would offer a unique value proposition, which is unmatched by any other company in terms of integration of services. And the second synergy, of course, is, you have management structures which are zonal, regional. There would be opportunities to bring synergies in there. And as we scale up the business, perhaps we can scale without investing in additional manpower on the back of synergies between the two structures. So those are the kind of synergies on the customer side as well as on the cost side.
All right. I'm looking at your numbers. Ravi, I'm looking at your numbers. The international supply chain business, which will be demerged, as per your presentation, has revenues of 16,300 crores with margins of around 6.5%. That will be one entity, right?
That's right, yeah.
And the remaining entity will have revenues of close to 1,800 odd crores with an EBITDA of roughly 200 crores. So that's a rough margin of around 10%. Are we getting that right?
Yeah, that's the ballpark number because those are the three operating businesses. So yes, you're right. Like that 1,000.
Now, in both these businesses, right? In both these businesses, what is the expected growth rate? And this 10% EBITDA margins, how much can that increase by virtue of synergies, as Nigel asked?
So what we have done is we have simplified the structure in terms of the growth rates. our guidance on the express and contract logistics business as well as the international supply chain business, that doesn't change. It's merely a simplification of structure, and therefore that's something which works well for shareholders. The guidance, I would say, the express and contract logistics businesses would continue to benefit from the growth in Indian economy, and we are seeing robust double-digit growth in the industry itself, and we are confident of increasing our market share in both these businesses, which means that we would continue to grow faster than that. On the international supply chain business, we have maintained that the next couple of quarters still look sluggish with subdued demand, but we are hopeful of a bounce back in second half of 2024. And at this point in time, we are focused on cost optimization and digitization and continue to expand our market share. So the growth outlook remains same in a much more simpler structure with some additional synergies. It's tough to quantify exactly what those synergies in contract and express would mean, but there would definitely be an addition on whatever we see today in terms of the bottom line.
Okay, all right. Ravi, how does both the balance sheets look like? That's the ECU and the logistics business. How would they look?
So balance sheet items are moving. So in terms of effective date, those amounts would change. But from a principal perspective, if you look at the group, over the last 2-3 years, we have generated significant internal accruals, and that has led to significant deleveraging. So in that context, one could estimate that both balance sheets would be healthy. There wouldn't be any significant amount of leverage. It would be easy to service on both sides. Exact numbers, like I said, the effective date would be once all the approvals are in place. This is only the first step. You have to go with the stock exchange approvals, NCLT approvals, and then ROC filings, etc. So the numbers will be moving, but we don't see any challenges on the leverage side. The balance sheets would be healthy for both the entities.
All right. Can you give us an exact number of how many shares will the resultant AllCargo Logistics have? I'm looking at the current outstanding shares. It's close to 25 crores. You go 3:1 bonus, it becomes about 100 odd crores. Gati currently has 13 crore shares. If you take out AllCargo's holding, it's about 6.5 crore shares. Additional Gati shares that come in at 63:10, the ratio would be close to 40 crores. So resultant number of shares in AllCargo Logistics would be how much as per you?
Yeah, so your numbers are bang on the target. With 3:1 bonus getting effective, the number of shares in AllCargo will be about 98.3 crore shares. In addition to that, the non-AllCargo shareholders of Gati in 63:10 ratio would get approximately another 40.4. So approximately 139.2 crore outstanding shares should be there for AllCargo Logistics post all the steps of rearrangement getting completed as part of one composite scheme. So your numbers are right.
So just to confirm it, going by the last closing price, AllCargo ECU will have a market capitalization of close to around 4,000 crores, and AllCargo Logistics should have a market capitalization of around 3,000 crores. Roughly, those numbers look correct?
I haven't done the maths on that, so I will leave it at that.
We are just using the last close price and your disclosed swap ratios as demarcation. Your current market cap is close to around 7,000 odd crores. And, basis the swap ratios and the resultant shares that you spoke about, this is the number that we come to in terms of calculation. I'm sure you would have done some math there.
Yeah, so like I said, the number of shares, you're correct, it would be 139.2 crore outstanding shares. In terms of the valuations, the independent valuers also take multiple things into account, like in case of listed entity, it would be the last 90 days or the 10 days volume weighted average price. So those numbers could be marginally different.
All right. And this Gati fundraise happens after the demerger, right?
So we would, the board has approved and we would contemplate what's the right time. It doesn't have to wait for the demerger to be entirely complete. One could run the process in parallel as well. We would assess the requirement and the timing in as per the guidance of the board. So
because if that happens, then the number of shares change, right? And then the entire shareholding that we're talking about also changes.
No, the swap ratio remains same. It doesn't change. Should there be any fundraise that could lead to additional shares and additional capital coming into the company, just like it would for any existing company when the number of shares change based on the new investments coming in and new shares being issued. But that's too premature right now. As we finalize anything on that, we'd be more than happy to come and talk to you and explain to you what we intend to do.
All right, Ravi, thanks a lot for joining in and giving us all those details about this simplification that you've just spoken about. The resultant entity, both the entities will see growth as per Ravi, the express and contract logistics business to grow faster than double digits in which the industry is growing. and lead to some margin synergies. For the international business, they're looking at some cost optimization. The resultant number of shares for AllCargo Logistics post this swap ratio would be about 139.2 crores. Thank you so much for joining in. With that, let's...
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.